Welcome to this video on the top real estate investment strategies for generating cash flow. Investing in real estate can be a great way to build wealth and generate passive income, but it's important to have a solid strategy in place. In this video, we'll be exploring popular real estate investment strategies that can help you generate steady cash flow. Whether you're a seasoned real estate investor or just getting started, this video will provide valuable insights and tips to help you make informed investment decisions. So, sit back, grab a pen and paper, and get ready to learn about the top real estate investment strategies for cash flow. Rental properties. Rental properties are a classic real estate investment strategy. The concept is simple. You buy a property, rent it out to tenants, and collect rent each month. The rental income should cover your mortgage, taxes, and expenses, and generate positive cash flow. There are several types of rental properties you can invest in. One option is single-family homes, which are popular among first-time investors. Another option is multifamily properties, such as duplexes or apartment buildings, which can provide higher cash flow but require more management. Let's take a closer look at an example of a rental property investment. Say you purchase a single-family home for $200,000 and put 20% down, $40,000. You secure a mortgage for the remaining $160,000 at a 4% interest rate over 30 years. Your monthly mortgage payment would be around $763. Now, let's say you rent out the property for $1,500 per month. After paying your mortgage and expenses, such as property taxes and insurance, you're left with a net cash flow of $500 per month. Over the course of a year, that's $6,000 in passive income. Investing in rental properties can be a great way to generate cash flow and build long-term wealth. It's important to carefully evaluate the local market, property expenses, and rental rates to ensure your investment is profitable. But if you do your research and invest wisely, rental properties can provide a steady stream of passive income for years to come. Vacation rentals. Vacation rentals, also known as short-term rentals, involve renting out a property to travelers for a period of days or weeks. This strategy can be especially lucrative during peak seasons and in popular vacation destinations. To invest in a vacation rental property, you'll need to carefully evaluate the local market and choose a property that's well suited for short-term rentals. Properties with multiple bedrooms, amenities like a pool or hot tub, and a prime location can command higher rental rates. Let's take a closer look at an example of a vacation rental investment. Say you purchase a beachfront condo for $300,000 and put 25% down, $75,000. You secure a mortgage for the remaining $225,000 at a 4.5% interest rate over 20 years. Your monthly mortgage payment would be around $1,452. Now, let's say you rent out the condo for $2,500 per week during peak season. After paying your mortgage and expenses, you're left with a net cash flow of $1,000 per week. Over the course of a year, that's $52,000 in passive income. Vacation rentals can be a highly profitable real estate investment strategy, but they require careful management and attention to detail. It's important to choose a property in a desirable location, set competitive rental rates, and provide a positive guest experience to encourage repeat bookings. With the right approach, vacation rentals can provide a significant source of cash flow and long-term growth potential. House hacking. House hacking involves buying a property, living in one unit or portion of the property, and renting out the other units or rooms. This strategy can allow you to offset your living expenses while generating passive income from your tenants. There are several ways to house hack. One option is to purchase a multi-unit property, such as a duplex or triplex, and live in one of the units while renting out the others. Another option is to purchase a larger single-family home and rent out rooms to roommates or short-term guests. Let's take a closer look at an example of a house hacking investment. Say you purchase a duplex for $400,000 and put 10% down, $40,000. You secure a mortgage for the remaining $360,000 at a 4% interest rate over 30 years. Your monthly mortgage payment would be around $1,715. Now, let's say you rent out one unit for $1,500 per month and live in the other unit. After paying your mortgage and expenses, you're left with a net cash flow of $785 per month. This can help offset your living expenses and generate passive income. House hacking can be a creative and effective way to generate cash flow while offsetting your living expenses. It's important to carefully evaluate the local market and choose a property that's well suited for this strategy. With the right approach, house hacking can provide a significant source of cash flow and help you build long-term wealth. Real estate investment trusts, REITs. REITs are a type of investment fund that own and operate income-generating real estate properties. These properties can include apartment buildings, office buildings, shopping centers, and more. Investors can purchase shares in a REIT and receive a portion of the income generated by the properties in the form of dividends. One of the advantages of investing in a REIT is that it provides exposure to a diversified portfolio of real estate properties without the hassle of property management. Additionally, REITs are required by law to distribute at least 90% of their taxable income to shareholders in the form of dividends, making them an attractive source of passive income. Let's take a closer look at an example of a REIT investment. Say you invest $10,000 in a REIT that owns a portfolio of apartment buildings. The REIT generates an annual dividend yield of 5%, resulting in $500 in annual dividend income. REITs can be a convenient and passive way to invest in income-generating real estate properties. It's important to carefully evaluate the performance and track record of a REIT before investing, as well as consider the fees and expenses associated with the investment. With the right approach, investing in REITs can provide a significant source of cash flow and help you achieve your long-term investment goals. Crowdfunding. Real estate crowdfunding involves pooling money from multiple investors to invest in a specific real estate project. Crowdfunding platforms such as Fundrise or Realtomogul allow individual investors to invest in real estate projects with relatively low minimum investment amounts. One of the benefits of real estate crowdfunding is the ability to invest in real estate with a smaller amount of capital than traditional real estate investing. Additionally, investors can choose to invest in a specific property or portfolio of properties, allowing for greater control and flexibility over their investments. Let's take a closer look at an example of a crowdfunding investment. Say you invest $5,000 in a crowdfunded project to build a new apartment building. The project has a projected annual return of 10%, resulting in $500 in annual cash flow. Crowdfunding can be a convenient and accessible way to invest in real estate projects and generate passive income. It's important to carefully evaluate the platform and investment opportunities before investing, as well as consider the risks and potential returns of the investment. With the right approach, real estate crowdfunding can provide a significant source of cash flow and help you diversify your investment portfolio. Lease options. Lease options involve leasing a property with an option to buy at a future date. This strategy can be attractive to tenants who are not yet ready to purchase a property but would like the option to do so in the future. Additionally, lease options can provide investors with a steady stream of rental income while potentially securing a future sale at a higher price. Let's take a closer look at an example of a lease option investment. Say you own a rental property worth $300,000 and lease it to a tenant with an option to purchase the property for $320,000 in 3 years. The tenant pays $1,500 per month in rent, resulting in $18,000 in annual rental income. Additionally, the tenant pays a non-refundable option fee of $5,000 at the start of the lease. If the tenant decides to exercise their option to purchase the property, you would receive a total of $345,000, $320,000 purchase price plus $25,000 in rental income and option fee for the property, resulting in a potential profit of $45,000. Lease options can be a creative and effective way to generate cash flow and potentially secure a future sale at a higher price. It's important to carefully evaluate the terms of the lease option agreement and ensure that it complies with local laws and regulations. With the right approach, lease options can provide a significant source of cash flow and help you build long-term wealth. Fix and flip. Fix and flip involves purchasing a distressed property, renovating it, and then selling it for a profit. This strategy can be attractive to investors who are looking to generate quick cash flow and build wealth through real estate. However, it does require a significant amount of expertise in property evaluation, renovation, and marketing. Let's take a closer look at an example of a fix and flip investment. Say you purchase a distressed property for $100,000, invest $50,000 in renovations, and then sell the property for $200,000. After subtracting the purchase price and renovation costs, you would have a profit of $50,000. Fix and flip can be a profitable real estate investment strategy if done correctly. It's important to carefully evaluate the property and renovation costs to ensure that the investment will be profitable. Additionally, it's important to have a solid understanding of the local real estate market and be able to effectively market and sell the renovated property. With the right approach, fix and flip can provide a significant source of cash flow and help you build long-term wealth. Mortgage notes. Mortgage notes involve purchasing the debt owed on a property, rather than the property itself. Essentially, you become the lender and collect monthly payments from the borrower. This strategy can be attractive to investors who are looking for a passive income stream and want to avoid the risks associated with property ownership and management. Let's take a closer look at an example of a mortgage note investment. Say you purchase a mortgage note with a face value of $200,000 at a discount of 20%, resulting in a purchase price of $160,000. The borrower is paying an interest rate of 5% and has a monthly payment of $1,073. Over the course of the mortgage, which has a remaining term of 20 years, you would collect a total of $257,520 in payments. After subtracting the purchase price, you would have a profit of $97,520. Mortgage notes can be a unique and profitable real estate investment strategy if done correctly. It's important to carefully evaluate the creditworthiness of the borrower and the terms of the mortgage note to ensure that the investment will be profitable. Additionally, it's important to have a solid understanding of the local real estate market and be able to effectively manage the mortgage note. With the right approach, mortgage notes can provide a significant source of passive cash flow and help you build long-term wealth. Thanks for watching this video on the top real estate investment strategies for generating cash flow. We hope you found this information helpful in your real estate investment journey. Remember, choosing the right investment strategy is key to achieving your financial goals. If you enjoyed this video, be sure to like, comment, and subscribe for more content on real estate investing and financial education. And as always, please do your own due diligence before making any investment decisions. Thanks again for watching, and we'll see you in the next video.